Well, Nvidia was the belle of the ball. There's a look at the rally over the last 5 years. Just a casual 3,000% gain. Today's gain was yet another record high, and it's hard to quibble with the quarter that they delivered, beating sales expectations. By the way, that means they grew sales 245%. They said that sales are going to double the next quarter. They increased their dividend by 150%. To make the stock more accessible to everyday investors, they're doing a 10-for-1 stock split in the coming weeks. Our next guest sees more upside from here. Stacy Rasgon is the Managing Director and Senior Analyst of U.S. Semiconductors at Bernstein. Your price target is $1,300, which implies a 30% gain. And I don't know, on a stock that's already doubled, that feels like a pedestrian move, right, for Nvidia.
Yeah, it's funny. Like I was on the phone talking to a lot of clients today, and somebody said, well, wait a minute, that would mean that it would become the most valuable company in the world. And maybe, yeah. Like, oh, okay, that doesn't seem like that much of a stretch at this point, right?
No, I think if you kept it at 1,300 after the stock split, then we could really talk about it. But
well, let's talk about that when we get there. I'll take it for now, right?
I mean, in your coverage, have you ever seen just a growth engine like this?
Yeah, I mean, not for a company that's at the kind of scale that they were at before it started. You see these kinds of growth numbers from smaller companies, right? But eventually, most companies hit the law of large numbers. It's just hard to grow, 1,000,000%, year over year forever, like when you're as big as this. But we are we're not even on the cusp of it anymore. We are headlong into the AI gold rush at this point. And remember, it's not like the stock is running ahead of itself. While it's up 1,000% or however much it is over the last year or two, like the valuation of Nvidia has actually gotten much lower. Like as much as the stock has gone up, the numbers have gone up by far more, right? And this is not like some sort of phantom thing. People are just like betting on growth. The growth is here, like it's already here, and we're certainly seeing it in the numbers and in the stock price now.
If there is a reason to be critical, I hear it. What happens in 2025? What happens in 2026? Sure. How much does growth stall? How do you think about that?
You bet. So there's a couple of like cyclical or structural bear cases. So the cyclical bear case is, well, there's a lot of spending going on, and eventually there'll be a pause. There'll be a digestion. And look, that was the worry going into this print thing. To be fair, like the numbers were strong. I think versus like buy-side whispers, they were kind of in line though. But they said a few things. The commentary, I think, was better. And one of the things they said was really around, they basically pulled the risk of that sort of near-term like transition period air pocket as they move from the current Hopper product lineup to the next generation, was called Blackwell. People were really worried about a potential air pocket during that transition. And one of the things that they kind of gave us confidence on is that is not happening. The Hopper demand is still very, very strong. Even as the supply constraints are easing, the demand is holding up. And then it seemed like a more positive on the timing of the Blackwell ramp. It sounds like they will. I mean, I think Jensen said they're going to have, quote unquote, a lot of Blackwell revenue this year, which is earlier than people thought. So that cyclical risk, at least for next year, I don't think is really a worry anymore. You can never prove a negative, right? So I mean, is it in 26? Is it in 27? Like, who knows? But for now, I think that cyclical risk is off the table. I think the structural worry along those same lines would be, look, there's a lot of money that is getting invested. And eventually there has to be a return on those investments. That the customers that are buying it, they have to generate a lot of revenue or save a lot of cost, or ideally both. And if it turns out that you can't get a return on those investments, then yeah, the whole thing would come crumbling down. For Nvidia and frankly for lots of other folks, not just Nvidia. I don't think that's true. We've done enough work on this. I think these opportunities are real. I think the business models are already starting to get developed. And I'm pretty confident that if we're talking 5 years or 10 years, we'll be talking about numbers that are still materially higher than what we're talking about today. I'm pretty positive about the opportunity.
And who's driving that? Because at some point, the hyperscalers take a backseat to broader enterprise. The CEOs talked about sovereign AI as kind of that final push. But are they really going to show up the way these hyperscalers are?
They already are. No, they are. So what they said on the call was that like large cloud players was only about, I think they said low 40% of their data center revenue. That's still high, but it was over 50% last quarter. So their customer base actually is starting to broaden and diversify. And then they gave some numbers like on the sovereign AI, they said that would be high single digit billions. So I don't know, $7, $8, $9 billion, whatever you mean by high single digit, but material amounts of revenue, that's this year. Like it's already happening.
Investors want to know what to do with the stock where you're sitting on such massive gains, or if you missed out altogether. What's the best advice?
I mean, look, so that's been the story the whole way up, right? I mean, if you owned it, you've been really happy. And if you haven't, it gets harder and harder every time, right? Although like I said, the stock is actually cheaper today, quite a bit cheaper than it was before it started its run. I mean, I think you have to be there. I think it's like you need a strong stomach with this one. It can be volatile. And even just recently, it wasn't that long ago, we saw, I don't remember what it was, a 20% drawdown, on some of their customer reports, right? I mean, so these things go up and down, but in general, like I don't have to argue with myself asking like whether or not is there demand for their products or not. Like there clearly is, and it's more demand than they can supply. And that seems to be likely true for quite a while. I think you need to be there.
AMD, your market perform, distant second. Why not put this in the basket as well?
Yeah, I mean, look, I don't want to knock AMD like too much. I mean, so they said they're going to do $4 billion in AI revenues this year, but I think investors expect them to probably do more than that, maybe 5 or 6. I don't want to knock that in the sense like it was like 0 a year ago. So going from 0 to even 4 over a year is a tremendous achievement. Now that being said, our numbers for Nvidia this year, we're over $100 billion in data center revenue. In that context, 4 billion or 5 or 6 or whatever is not that big. The dollars are not flowing there. We also have yet to hear anything about their roadmap, and it's given what we know about Nvidia's roadmap, it's hard for others, AMD and others, to potentially compete. So we don't know anything about the roadmaps yet. And then frankly, for AMD, like the rest of their business, and they're not the only ones. Again, I don't want to put too much on them, but the general like market for traditional servers has been weaker as spending has been going toward AI. Some of their other end markets, AMD's gaming is quite weak. Their embedded business, which is mostly the Xilinx business, the FPGA business that they bought a little while back, that's very weak. And so as strong as their AI business has been, it hasn't really been enough to cover up the weakness in the rest of the business. And we have not seen numbers for AMD going up, like frankly, in well over a year. Like I think the last 6 or 7 quarters, we've had numbers at best stay flat and in most cases actually go down after their earnings. And so I think the long-term investment case on AMD, it really just depends on what do you think is the opportunity here. Like I think the real like hope for AMD is that the opportunity is so big that even if they just get a little bit of it's enough. And let's say they do 4, 5, or 6 billion this year. I think if you believe they're going to be doing 20 billion in a year or two for AI, the stock's probably a buy. If you think they're going to be doing 10 billion, it's probably not. Right? I think it just comes down to that. We just don't know enough yet to really know how big that opportunity is going to be for